Hi everyone, welcome back to Corporate Decoder. Today we're diving into QVC Group's latest filing, and let's just say things are getting a little complicated with how they're paying their top people. So QVC Group, a familiar name in the retail world, recently put out a report on August 12th, 2025. They're telling us about some changes they're making to how they pay their high-level employees, some of which are pretty unusual. And if you appreciate getting straight insights from these corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so come join the conversation there. This is what's called a Form 8K. Which is basically a way for companies to announce big news that investors need to know about right away. Think of it like a company's breaking news alert. QVC Group is telling us that their board of directors, along with the people who decide on pay, have looked really closely at how they reward their employees. They found that the old way of doing things, the old pay plans, and what they measured to decide bonuses could be better. They want to make sure the pay truly motivates people to do a great job for the company. So here's where it gets interesting. They're making some guarantees to their employees. For most employees, and even for their top executives like the CEO David Rawlinson and CFO Bill Wofford, they're guaranteeing a certain amount of their potential bonus pay. For 2026, they're guaranteeing the full target bonus for these top 9 executives. For other employees, they're guaranteeing 50% of their target bonus for both 2026. They're guaranteeing the full target bonus for these top 9 executives. For other employees, they're guaranteeing 50% of their target bonus for both 2026. They're guaranteeing the full target bonus for these top 9 executives. For other employees, they're guaranteeing 50% of their target bonus for both 2025 and 2026. They're guaranteeing the full target bonus for these top 9 executives. For other employees, they're guaranteeing 50% of their target bonus for both 2025 and 2026. This guaranteeing pay isn't sitting around waiting until January of next year either. For most people, this guaranteed compensation is a significant move. It means that no matter what happens with sales or profits, a certain portion of the bonus is locked in, as long as the employee stays with the company through the end of 26. This is a strong retention tool, especially in uncertain economic times, making sure the company holds on to its key talent. Now, you might think guaranteed pay means no effort required, but QVC Group is trying to keep their top dogs motivated. A part of that guaranteed money for the top executives is still tied to hitting specific company goals. So while they're getting a safety net, they still need to perform to get the full amount. This is a balancing act common in executive compensation. Here's another twist. They're actually going to pay this guaranteed compensation in advance, or what they call prepaying it for these senior executives. This is definitely an unusual move. It means these executives get their guaranteed paychecks up front. But there's a catch. If these top execs leave the company before the end of 2026, or if they don't meet the performance goals that are tied to this prepaid money, they have to pay it all back, and not just the amount they received, but they have to pay it back after taxes. That means if they got, say, $100,000 and had to pay a 30% tax on it, leaving them with $70,000, they would owe the company the full $100 and had to pay a 30% tax on it, leaving them with $70,000. They would owe the company the full $100 in dollars and had to pay a 30% tax on it. Now let's briefly look at their stock situation. QVC Group has different classes of stock. They have Series A common stock trading under the symbol QVCGA on the Nasdaq. They also have Series B common stock, which trades on a smaller market called OTCQB. And then there's their Series A cumulative redeemable preferred stock, which has a fixed dividend rate of 8.0%. This type of stock is usually less volatile than common stock, and it pays a regular dividend. The redeemable part means the company can buy it back from shareholders at some point, usually at a set price. This filing also includes important data meant for computers to read in something called inline XBRL format. This helps financial analysts and regulators process the information much faster. It's like giving the report a digital upgrade for easier digestion. The report is signed by Catherine C. Jewell, who holds a key role as Vice President and Secretary for QVC Group. This signature confirms the accuracy of the information presented in the filing. So what does all this mean for QVC Group? The company is clearly focused on keeping its top talent and ensuring they're working towards specific goals. By offering guaranteed compensation and even prepaying it, they're making a significant commitment to their senior executives. This strategy aims to provide stability and motivation, especially during times when retaining experienced leaders is crucial for sustained growth and navigating market challenges. However, prepaying compensation, especially with strict repayment clauses, can also be a sign of underlying concern about retention or a need to incentivize leadership strongly to achieve specific future targets. It's a big bet on their executives. If these executives perform well and stay, it could pay off, but if they leave or miss goals, the financial implications for those individuals could be severe, and the company might face administrative challenges in recouping the funds. Looking at the broader picture, QVC Group's compensation changes signal a period of strategic focus on its leadership team, while the guarantees offer a level of security for employees. The performance-based conditions and repayment terms create a clear performance expectation. It will be interesting to watch how these new compensation structures influence the company's performance and leadership stability moving forward. Alright, that's our breakdown of QVC Group's latest filing regarding their executive compensation. What's your take on these changes, and do you think prepaying executive compensation is a smart move or a risky one? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.